right. All right. So here we are. And in our third panel, we've sort of ambitiously entitled it Tax Professionals, Globalization and Capitalism. Now, if that doesn't cover everything under the sun, I'm not sure what would. So I thought I'd start us out by asking a little bit to think about sort of the shape of really modern legal professional services, tax services. And so the question, I guess I'd say is, what are the characteristics today of sort of the modern entrepreneurial, very market structured delivery of professional legal services across the globe? And what does that look like? And how's that affecting tax professionals? The world does look different than it did. I mean, the U.S. has had an income tax for over 100 years, but the structure of tax advising, the market for it, looks immensely different today than it did in 1922. And so what does that really mean for tax professionals? So maybe I'll just start with that and open it up for your initial thoughts. Robert, I see you're unmuted. Did you want to jump in? Oh, I can't hear you. Maybe volume up. Now you're muted, unmuted. Great. Let's see. I'm wanting to get off and come back on again. Perfect. All right. Does someone else want to sort of jump in while we're waiting for Robert to return?
I can jump in if you like.
Yeah, lovely. Yeah.
Yeah, one of the things I think, because of the complexity of tax, as you've mentioned, and also the fact that increasingly taxpayers will work in a cross-border way, so you have to look for advisors, and this is where sometimes the big firms come in quite well, because you can actually have a partner in another jurisdiction. But I think it's very hard for tax practitioners these days to feel, well, I can cover it all, because you can't. It's just too specialized. And I think that's where that can be problematic, even from an ethical perspective. So some work that we've done recently with talking to tax trainees in the big four firms, talking to trainees, then talking to managers and directors, was around how the trainees felt they had voice or not within large firms, within the big four. And their initial reaction would be, oh yeah, of course I have a voice. I can say anything to my manager. But when you actually started to unpick what they actually could say, okay, they could ask a technical question, but would they raise something more ethical? Would they raise something more around the logistics of how the firm is organized? Absolutely no way. And equally, the managers and directors would say, oh yeah, absolutely. Our door is always open. They can come and talk to us about anything. But again, when you dug down, the anything is quite limited. So I think one of the things, I think that makes it very difficult for trainees to speak up, particularly in the context of these huge firms where there's big socialization, there's the huge hierarchy. But we need to foster that. So I think something needs to be done in that piece. But I think also what we heard from trainees is, even if they felt there was an issue, they may not raise it because they would think, oh, well, I don't know that much. Maybe there's another angle on this. So I think sometimes it's not about somebody acting unethically as such. It might be thinking, well, look, I can't have the whole picture on this because it's too complicated. And so there does need to be a team. And if there's something that I don't really understand, I may not raise that because I don't want to highlight it, my lack of knowledge in that particular area. So I think there's lots going on there with complexity and how that manifests itself.
Great. Yeah. Robert.
Can you hear me now?
Oh, we can indeed. Splendid.
Very good. So can you, I got a bit confused. So yeah. I recall you had asked me a question. I don't remember.
I'm happy to sort of get us reoriented. So, our panel this time is globalization and capitalization. So the starting question was just to really think about how, what is the nature of today's market for global, tax services? And
it's
what does that do to the professional?
It's overwhelmingly complex. Think of all the global initiatives. Think of the Pillar 2 directive. Think of the Unshell directive. In my opinion, having been in tax for the past 23 years, I can tell you with certainty that it's overwhelmingly complex. And it's very easy to get it wrong, especially in the area of transfer pricing. You can be in perfect good faith, make an error of judgment, or simply disagree with the tax authorities and make yourself liable to enormous penalties and punitive interest. So you need to get it right. And that is the role of the tax advisor, to cushion, to defend, to shield, to protect the taxpayer from this heavily regulated environment, this heavily compliance environment, where it's very easy to get it wrong, even though you would be acting in perfect good faith, because that is the most important thing at the end of the day.
Henry.
Adding to what both Elaine and Robert have said, it clearly is, the complexity is daunting. And I started my career with a sole practitioner back in the late 70s, where I was his first full-time hire. And it was difficult back then. And I have the greatest respect for those individuals who are operating in a small practice environment, who do not have the ability to call on a national tax office or a large network of international firms to provide them advice. And it is challenging because the world has become clearly a much smaller place, where 50 plus years ago, only large multinational publicly traded corporations were doing cross-border business. Now you can have a 2 or 3 person company sourcing materials from outside the US or selling outside the US, and there are tax consequences. And the key is, I think, to know your limitations. That's the key to success in life. And we oftentimes find where professional accountants get into trouble is that they want to do the right thing and they want to service their clients, and are sometimes afraid to engage another professional who has the requisite knowledge to assist them in the engagement. And invariably, they're trying to do the right thing. They're afraid that if they brought someone else to the table, they might run the risk of losing the client. So there's those pressures, and they want to be seen in the eyes of their client as the go-to person. So they attempt to do the right thing. They don't get it right, and there are negative consequences to them, either in the form of penalties and fines issued by the taxing authority, and then there's a potential professional liability action that the professional is going to have to deal with as a result of the client not being in compliance.
You've each so far raised a number of things I sort of wanted to weave back through. I think I'm going to start, Elaine, with something you said that I was hearing a thread of this, and it resonated with, I think, even some of our conversation from the last panel, which was when you were talking about the trainees and perhaps, or early career persons, particularly early career in a larger institution, although I could see this also being a problem very much in a one, Henry's, I'm the first employee, which is, if I have a question, I'm seeing an issue, a transaction, a piece of advice, and my concern, honestly, is one I would frame as ethical and not interpretive or technical. If I bring it forward, not only does it highlight, maybe I just don't know. So that's in some ways, that's my easy way. It's both my worry, but also my easy way out. I'm sure there's no problem. I must not know all the things, and I'm certainly not going to bother them to explain the world of tax law to me. But I think it also kind of bumps up against the hesitation of raising it, bumps up against this idea that frame something which is kind of an ethical question to the person to whom I directly report, I'm suggesting they are doing it wrong, and that must mean they're bad, because it's an ethical point. It's not interpretive. It's not a debate between these two courts trying to get a better sense of how you see the factors weighing out. It's, I didn't think we ethically could do that. Why do you think we can? Is a pretty bold statement to be saying to anybody. And there might be ways to gracefully do that, but I think it's hard. I think it's challenging. And I'm not sure, even though I raised the idea that much of tax advising practice has changed with globalization, which I think it has. I think this issue is a challenge, large or small. The other thing I sort of wanted to kind of come around to, and three of you sort of touched on this, but I was thinking about, as we look at firms across the spectrum from small and more domestic to large and more global, there are ways in which each of them is positioned to have some advantages and some challenges in sort of ethical work. So I think maybe Elaine, you were the person who raised it first, maybe first panel, which is, if you're at a smaller firm, you get experience building up sort of a familiarity with the points of tension and thinking through, what do I need to do? Maybe in a larger institution, you immediately move that question to your head of compliance, or the person who handles your ethical issues. I don't know if that's going to be universal, but that struck me as an interesting challenge. I was thinking the opposite, which of course small firms don't have necessarily a designated person who spends all their time thinking, exploring, keeping up to date, talking to other professionals who have that same role. And that's a loss or a difficulty for the small firm, but maybe they build it internally. And also I was thinking about the multiple business layers, and is it easier to the extent ethics at the end of the day is bumping up against money, right? I mean, if that's really, no matter how many ways we turn it, at the end of the day, the place where your ethics truly sort of hits a wall is losing the client, losing them because you won't do what they want, losing them because you decide you just don't want to continue. Is that an easier decision in a smaller practice, or a harder one? Is it an easier decision in a larger firm, or not? Because really it's not your call to make. And I was just curious if you all had some thoughts on those kinds of, or other differences between larger and smaller firms, and the ways in which their structure supports or challenges sort of the ethical duties of the tax advisor.
Yeah, I think that there's so many layers to this, because in a smaller firm, you're likely to have a more direct relationship maybe with a client. You're the one that they always get on the phone, and that's what you often think. So you do have that trusted advisor sort of advantage maybe. But in a smaller firm, the loss of one client could be the death of the firm. I think so that it depends on the size and so on, but it can be that can be detrimental. I think you're also in smaller firms more often dealing maybe with the owner manager whose tax money is actually their own money. I think in the bigger firms where you're dealing with multinationals, you're dealing with the CFO or whatever. It's not actually their money, So I think when you're really at the coalface of dealing with the person trying to run their own firm, trying to pay their staff, trying to get through recession or COVID or whatever it might be, and you have a really good relationship with them, that presents its own dilemmas if they're saying, I'm going to be late with the tax payment because I have to pay the wages, or so I think, but at the same time, I think from the work we've done talking to practitioners that work in different types of firms, the smaller firm practitioner is actually a bit more agile about having had to think about these things, because they have to deal with things on a case-by-case basis. The bigger firm practitioners are so specialized, so embedded within a structure where they don't have to think about, there's somebody else collecting the fee, or but also you have that sort of excuse, if you like, of saying, oh, look, there's no way my partners could agree with this, this isn't our policy. So you're a little bit removed, I think, from the, you can say, well, look, PwC just wouldn't sanction that sort of behavior, whatever it might be. But again, I just feel that, or what we felt from our research was that the sort of ethical muscles, if you like, hadn't developed so much in the tax practitioners in the bigger firms that can just refer something on to somebody else. And so we sort of felt that that structure probably impeded their development in terms of, and I think you mentioned it before, Diane, the whole idea of making the ethics education applied by having the cases. I think that's really important, because when we talked to practitioners and asked them about ethics and they said, oh, I don't really know what you're talking about, then I would give them an example and say, well, what if this happened? And that kind of makes them think, oh, actually, you know what, that's kind of tricky. I'm not really sure. But it's thinking through those kinds of things that actually allow you to develop that sort of muscle, if you like. So I think there's a lot going on in terms of the differences between the issues that arise in the smaller firms and the larger firms. That's not to say that either one of them, I think, is more unethical or less. I think they just have different challenges. And certainly when we looked at this from a quantitative perspective, to actually measuring moral reasoning in the firms, we found no difference across larger firms and smaller firms, but the issues they raise are different.
Henry.
Well, just mentioning that about the large firm versus the small firm, I mean, it's public knowledge that there was a very large firm that was assessed a very large fine by the Securities and Exchange Commission for their younger staff not being compliant or cheating on the internal ethics continuing education. And it's very public, and it was something that, once again, you would think that a larger firm would have those checks and balances in place. But as Elaine said, those people maybe haven't been on the front line before, and they can just pass it off to somebody else. And if they look around and they see their colleagues doing the same thing, and there's no negative repercussions to them, why shouldn't they continue to do the same thing?
Robert, I didn't know if there was something that you wanted to add from. Okay, great. You know, one of the things you talked about examples and the power of cases or hypos to sort of help people both understand what ethics means, right? Capture those ideas. You know, where would you see, what would you like to see in terms of ethics training and education, even before people are joining practice? You know, obviously there's ethical training in law school, and I'm sure through the certainly in the US CPA requirements and things like that. You know, what are the deficits there, or what would you at least imagine might be some additions to that? That if we're really trying to start people early in how they think about this, and maybe get their frame oriented from time one, what recommendations might you imagine, or do you at least consider exploring?
I would think of leading by example. So choosing the right partners, choosing the right leaders, and then if the leader is honest, if the leader values integrity over above everything else, then of course there will be a cascading of values where the rest of the team will respect those values. An important value which needs to be taught to new hires is that the success of a tax advisor is not measured by reference to growth only, by reference to revenues only, by reference to marketing, but by reference to other values, by reference to the value of doing the right thing, by thought leadership, and at the end of the day, I mean, honesty pays. In the long run, honesty pays. In the short time, possibly not. But in your working life, you will see that even clients prefer going to someone who's honest, whose integrity is beyond doubt, and who looks high, you know, who doesn't have anything to hide, who can't be blackmailed, and who's, you know, I mean, whose positioning in the market is solely based on his knowledge and his strength as a professional, and not because we are not businessmen, right? Tax practitioners are not businessmen, and we should not think of themselves as being business people. They are professionals. They are tax advisors. They are lawyers. So they are there to carry out a function, to explain. They are not there to become, you know, to oversell. You know, so that I think is a very, very important thing which needs to be taught to new entries at a very early stage. And if the partner gets it right, then there will be a cascading of values.
So yeah, I think that's right. I mean, you can set it from the top, and so I guess kind of weaving that back around to the even education. How is it we get to the point where we have firms that are looking for that as their leadership vision, for firms that are embracing this idea that it's not necessarily exclusively, the pot of money you're bringing in each year that is the sole benchmark. Sort of. I'm imagining that starts on day one, kind of my frame of what does it mean to be a tax advisor. Elaine, you had.
Yeah, there's a couple of things there. I think we need to go further back than just even the firms. So I mean, we need to be doing stuff in our own classrooms. I mean, because I look at ethics in tax, I'm also teaching tax, so you do try to bring that in. And I think one of the things that we've debated over the years, but I think is really important to think about, is this idea, and I think we're getting a certain amount of success in this, but in the past, there was an ethics module. It was there, you did it, you ticked the box on that, and then you got on with all of the other stuff, particularly in accounting education and tax education, because we're driven by the exemptions from the professional firms as well. So there's only so much space you have in the curriculum. So ethics was kind of hived off. I think it's really important that it be brought into every module so that you're looking at the ethical issues, not in isolation in this box that sits over there that doesn't have anything to do with practice. And that's where we need the applied examples. We need the case studies. Because again, if you teach it as a general subject that everybody's taking, you don't have those contextual examples that you need to really get people sort of thinking. So I think we need to be doing it at higher education. We need to be doing it as CPD. The profession needs to be looking at this more. And again, it's one of the things that frustrates me when you talk to practitioners and you say, well, how much do you know about your code of ethics, from the Irish Tax Institute? And it's in a little box in the plastic, it's a little booklet that hasn't had the plastic taken off it. Because I think to some degree, that's the other thing about the big firms is, I think to some degree, trainees end up being loyal to the large firm they trained with, even more than maybe their professional institute, because they run the training courses, they run CPD and all that kind of thing within the firms. So I would see sometimes people less associated with their professional institutes and more with their firm, which again gives a lot of power, I suppose, to the firms. The firms are also powerful within the institutes because they often are the ones that will volunteer. They're on all the committees and so on. So there's a couple of things now, but I think just to go back to what you mentioned about the tone from the top, I can see these days the firms are having problems getting the talent they want. And the new generation is completely different from old generations. Like, we would never have broken a training contract, even if you were being treated really badly and you worked all hours and you weren't getting much money. Nowadays, the next generation are a little bit more clued in, I think, to work-life balance. They're a little bit more clued into sustainability. So I actually think the smarter firms will have the tone at the top change in order to attract the talent. That would be the way I would be looking at it, so that you want your managing partner to be listening to those things, not to be stuck in the past saying, no, you have to do it this way because that's the way we trained. So I think that might actually be what drives the firms, would be to actually attract the talent they need by changing maybe the approach and having it more open dialogue. So yeah.
Amparo.
Yeah, and also the tools you are using, because I had the opportunity to review several surveys to learn which were the tax concerns in many companies in different countries. And I conducted this survey for this research for the Institute of Fiscal Studies in Spain. And sustainability and digitization were always scoring high, and this gives room to sustainability issues, include transparency in ethical decisions in tax matters and reporting, and this is changing the culture. And also when it comes to automation processes, it's true that more and more is left to software. And this inevitably leads us to the ethical design of software. And many APIs are going to be implemented in the new strategies of compliance and connecting all the business environment, not only the taxpayer environment, to the tax administration in order to get all types of data. So I would raise this issue. It's not only that you as a tax advisor are behaving ethically, but also you are using ethical tools and communicating it appropriately. And regarding the risk aversion, yes, we've said there are taxpayers that are more conservative, others that roll the dice at the very beginning. It's the same with tax advisors, but you cannot proceed like in a traffic lights saying red, green, and yellow in the middle, or you were saying bright, dark, and gray, no? Because you can have certified taxpayers, or you could have certified tax advisors in the policy of having a stick and carrot. So maybe not everyone wants to be listed as a gray or riskier tax advisor or dark, no, but at least having the extra plus or the extra recognition of instead of having a certified taxpayer, also a certified accountant that cares for implementation, not only about due diligence and risk management, but about the ethical impact of their decisions. Thank you.
Right. Yeah, I actually want us to come back to the automation and spend a little bit of time there. Two things I just want to comment on before I turn to Carlos. First one from you, Amparo. I think we even see informally in the market, not extensively, but some, this idea of tiering of reputation, and that clients under certain circumstances, have said to me, oh, we wanted to have X firm, X tax lawyer, because we want to signal to everybody that we're doing this right. Like, it's extra important that signaling happen. And that so that in the market, there is a little bit of understanding, and that's nothing official, but we do see it. So it says there's a little something there, perhaps. And then, Elena, I was just going to turn to your point about teaching ethics in schools, or before you get to the practice, before you get to the firm, where you may have continued training, but the original education. Certainly, I see in a law school setting, ethics is taught, and the required ethics class and the professional responsibility exam, it's generic, it's not tax specific, and it just doesn't hit the mark. I mean, you learn your basic rules, and you might learn things that you learn things we would want you to know anyway, but you need to know more, and you need to have more context. And I have to say, my obviously dated takeaway from professional responsibility was something close to please don't steal from your clients. And whereas, I'm seeing a little bit more challenge for my students. And I think exactly, you're right, where you sort of can weave that in is going to be really helpful. And even in the professional sort of educational context, again, that's typically where, I'm doing panels on ethics. It's both a little concerning, but very exciting, to the extent audience members will come up afterwards and you've gripped them because you've described something sometimes they hadn't fully articulated to themselves as an ethical dilemma. They had experienced something that had something that kind of bothered them. They weren't quite sure what to do, but they hadn't quite labeled it an ethics issue either. And yet when someone did, it helped them see it a little more clearly and just try to think it through a little bit more. It doesn't make it easy, but at least it gave it a grip that they hadn't quite been able to have before. And I think a large part of it, besides perhaps not being deeply familiar with sort of ethics rules as applied to tax. Also just the examples, like that was just really what helped them move through it. So as I said, I'm going to come back to automation, but Carlos, I wanted to go to you next.
Actually, I was going to restate some of the points Elaine just raised a few moments ago. And actually, you went over several of them. I believe that obviously education in ethics is fundamental. But I would agree with the two of you that a individual subject called ethics, studied as a general subject, as someone might study, I don't know, philosophy or philology or whatever, doesn't get the work right exactly done. I think that for us to permeate the entire structure of society and incorporate within society all of these values, because within those classrooms, you will have in economics classrooms and in accounting classrooms and in law classrooms, you will have people that will be businessmen, that you will have people that will be tax advisors, you will have people that will participate that will be taxpayers, you will have people that will participate in this dynamic from each and every possible angle. And then, therefore, I do believe, and actually there was a standard I followed through, I have been following through in my classes, is to take ethical examples into the regular explanations of tax law. When you're dealing with, I don't know, with federal fiscal federalism and conflicts of double taxation that might arise internally, for saying in federal countries as Venezuela, that you might explain those issues, particularly when having into account the federal, the state, and the local perspective, and the taxpayer perspective, with an ethical component, and then include within the case study that you give your students elements for them to identify the issues, and then to react on issues, and then to instill upon them the basic guidelines on ethical behavior that those students later on, when they are tax advisors, when they work for the tax administration, when they work for a big multinational, or when they are the owners of the multinational, they might implement as part of their regular education. And that leads me to the example that Amparo was mentioning a few moments ago. The problem of big data, the problem of artificial intelligence, and the ongoing digitalization of tax administration and tax procedures. There are, you're absolutely familiar with these problems, but the digitalization of tax administrations bring to the table enormous ethical problems derived from the misuse of data provided by taxpayers, and even coming from other sources. There is, just by means of an example, there is the garbage in, garbage out principle, which those familiar with informatics and stuff are very familiar, according to which actually the algorithm will do that what you teach to it through the information you feed to the algorithm. And that brings the issues of actually, I think it was Amparo that mentioned it in the past panel. For instance, the problem of profiling, that in which there are ethical issues involved from the side of the tax administration that we should not forget about. When we talk about tax professionals also advise the tax administration. Tax professionals also devise tax systems, and tax professionals also participate throughout the entire chain of commercialization in a particular segment of market. And therefore, if we go complementing what Robert just said a few moments ago, Robert suggested an approach from the top to the bottom. So what if we try an approach from the bottom to the top, just by teaching regular students ethics, but in practical scenarios, by incorporating ethics and incorporating, not by calling it, by labeling a specific chapter in the textbook, tax ethics. No. Just by providing them with close to real life or real life examples of dubious behavior that might be addressed properly and ethically right within the classroom.
It would also help to teach students the concept of the common good and the philosophy of taxation at the end of the day, so they understand why the rules are how they are, and the end of the rules. I think that is absolutely fundamental. So what would happen if a system goes belly up? Then there would be no hospitals. There would be, the system would collapse. And I think that is absolutely important. So not rules just for their own sake, but they understand why a system has to work in a certain way.
Henry?
Yeah, and I think this speaks to the issue of what type of ethics are being taught. I think in many cases it's behavioral ethics, like you said, Diane. You shall not steal from your clients, but maybe, and I think we could make some advancement here if the regulatory ethics aspect of that is introduced into the curriculum, which I'm not sure it necessarily is. And that's, where you are bringing these real life examples, these cases to the forefront so that people can contextualize the behavioral aspects in a real life situation.
I had a lot swirling, as always, from you all. And I wanted to kind of come back to, as I said I would, Amparo, a little bit more about AI. And Carlos picked up some of this, I think, focusing on, in particular, on the government side and sort of the ethical tax issues from the government in that intersection of, big data, digitalization, and AI. And one could see that, through the examples of, profiling, audit selection, things like that. Some obvious, some indirect. We've been looking at those issues in the US just recently in trying to understand which taxpayers are audited more frequently, and sort of what, in fact, is the explanation for that. And so even if it's not intentional, but if it looks on balance problematic, it's probably built into a system of selection. I wanted to turn the question back and ask a little bit more about, and this is going forward, but AI in the context of the tax practice from the tax professionals. And we're not completely there yet, but it's also happening right in front of us. And so what kinds of things would you want to be, if someone came to you and said, we're in the process of really bringing AI into our tax practice? And that can mean many different things. There are tax programs out there that will kind of go beyond sort of Alexis, kind of automated research through cases and more into almost answering the question. We also have seen, this is sort of hit the news in the US more recently over the past couple weeks, but the idea of bots that will effectively be able to be asked a question, gather and write an answer, not on any field. So it's not sort of tax specific, it's not legal specific. So we all have that out there. So someone comes to you and says, we're looking to sort of really integrate advanced AI into our tax practice. They're not even sure what they mean, but they know that's the thing to be thinking about. They're forward-looking members of the leadership of their firm. So they're definitely going to be bringing AI in. When their clients say, are you incorporating AI? The answer is, of course, yes. We are not back with pencils. But they're not sure what it means and what they should be wary of, what they should be asking about. So if you were going to help build that list of questions and concerns for them, what would it include? Elaine, I see you.
Yeah, we've done some work on this recently, and it's really interesting. It's scary how far the AI thing is moving on. I don't know if any of you looked at that chat GDP. I'll get the letters wrong, but it's it's unbelievable. We just did a seminar last week on it, myself and a colleague who've written on the impact of AI on the tax profession. And it was to a group of practitioners over here in Santiago. So there was people from revenue, there was people from the Big Four and so on. And my colleague actually, did a live demonstration saying, write an international tax course. And the entire thing starts writing. Like, it's just really scary. He wrote down, describe the tax system in Chile. And it starts, and it's in perfect English. It's well thought out. Then compare that to Ireland. And it was doing it, and it was really, really scary. I think we scared everybody. But I'm not a techie person, so I don't know how all of this stuff works, but certainly, I mean, it's super to think about some of these routine, hard, repetitive tasks, being done in 24/7 by AI or some sort of automation that frees up professionals' time to do a lot more, value added, I suppose, activities and make judgments and so on. So in lots of ways, you can see the advantages from a time perspective and all that kind of stuff, even for fees for clients and so on. But I suppose if you look at, and you don't want to panic people in terms of, we've always had, breakthroughs in technology that will have heralded these calls that there's going to be jobs for nobody and we're all going to be taken over by the robots. But AI is doing something kind of different, because it is actually replicating the cognitive part, where other displacement of labor would have been from the more physical into the more cognitive. So I think we are going to see a big change, I think, in the tax profession. It's not going to be wiped out, because there's lots of things that can't be done necessarily by AI. But an awful lot of the routine jobs that are done by trainees can be. So the compliance stuff, and that's already happening at the moment. But what we could see as an issue, if you kind of delve a little bit deeper, is if you've got fewer trainees that need to be hired to do that routine stuff at the beginning, your pipeline starts getting narrower and narrower. So you don't have that pyramid shape that we have, with the trainees and the managers and so on. So first of all, you may need fewer people to go in, which means you don't have that pipeline, but you're also not training people in the skill development they need by doing things sometimes manually that are routine. So, in Ireland, we have a complicated calculation in tax for the tax exemption part of retirement relief. But if you don't know how to do the calculation, you're not going to be able to advise a client on how to maximize the calculation, again, in advance of them retiring. So I don't know whether we'll end up with firms still hiring lots of trainees and getting them to do non-essential stuff that could be automated just to be able to make sure that they're skilled, or do we see that pipeline narrowing significantly and finding that we don't have the people then to draw on at the higher levels to make those judgment calls? So I think, and then Carlos kind of mentioned it as well, this whole idea of, who do you blame if the thing goes wrong then? If it's an automated system, is it the software designer? Is it the practitioner who's supposed to be looking at it? Is the taxpayer? So what happens and who bears responsibility? They've been dealing with these issues around ethics in AI in things like driverless vehicles and so on for longer than we've been probably looking at it in tax. And they haven't solved any of those liability issues yet in terms of the insurance. So I think it's really interesting. I get scared because I don't even know what it really means. And I feel like we should be probably teaching data analytics on all our tax courses now, but I'm not going to put my hand up and say I can teach it. I kind of feel I have to do a course in it myself to even understand what it means. But it's certainly something that I think we need to be bringing into all our courses so our students are well clued in, but also to think about the implications it's going to have for the profession.
I think AI has a big role to play in transfer pricing, for example, where a lot of work can be done by the computers. And I think there's always a lot of scope for AI in the GLOBE initiative. So if GLOBE, the more you align the tax profit to the accounting profit, I think the easier it would be for artificial intelligence to work out the tax due. The more you remove the subjectivities, the simpler the system, I think the more you can make the AI work for you. Nonetheless, what you have to keep in mind is that if you get it wrong, ultimately it's the directors of the company which will go into prison, to prison, and not the computer for you. And that is a very, very important consideration. So the human element, the review, needs to remain. Possibly a solution may be that to give taxpayers the option to go for a simplified tax computation, which could be worked out entirely by AI, to go for a system of flat withholding taxes based on, say, I don't know, turnover. And that could be an option to make things simpler for setups which don't want to go to the complexities and don't want to hire teams of advisors and so on and so forth.
Henry, and then Carlos.
Yeah, so I look at AI as a positive development in the sense that from a compliance perspective, you can identify. Oftentimes, you're in a situation where management or your client, the business has expanded to a point where they don't know where every sale is. They don't necessarily know where every employee is located. And once certain thresholds are met in a particular jurisdiction, you have a filing obligation, and AI can assist with something like that. But I think clearly the responsibility is on the professional to identify and making use of these tools, but making use of them in a way that they can't accept just the output based on it came out of the software. Oftentimes you have a younger staff. Well, I filled in the box and that's what it said, and without taking that next step. And in our revisions of standards, we're proposing a new standard on reliance on tools, where the professional, the CPA, has an obligation to make sure that the rules he or she is, or the tools he or she is using are adequate and are correct. Now, that doesn't necessarily mean you check every single tax calculation that the computer did, but you have to have a level of assurance that it indeed is correct. And there are plenty of times where, especially with the big overhaul at the end of 2017 here with the Tax Cuts and Jobs Act, there were some incentives that were put in that the software companies computed and then ultimately changed their calculations once additional information was provided to them. And if you were to go back to those early returns, clearly some of them are wrong. But you have a reliance on that software to do it right. But you ultimately have the obligation, I think, as a professional, to make use of those tools, but to also make sure that the output is correct.
Thank you. Carlos.
I would like to start by quoting Walt Disney, one of his movies. In any case, you do remember the movie Fantasia from 1940, right? And within that movie, there's this little story of Mickey Mouse, doing the sorcerer's apprentice and asking through magic to a set of rooms to collect water. If you remember the movie, then you might recall that the brooms start collecting water without limit. Then it leads to a flooding room, and then Mickey starts struggling and fighting with the brooms and saying, he finally manages to destroy them in order for them to stop. What the brooms do is that they, each and every piece of broomsticks become new brooms that keep collecting water, and that in the end that it leads to a full mess. When it comes greatly based on that particular story that is taught in classrooms in cybernetics, Professor Norbert Wiener, the inventor of cybernetics, coined up this axiom of cybernetics, according to which you should not lead, or you should not rely on a process led by a machine that you do not understand what it is about. You need to fully understand what the machine does, because the truth for the machine is what the programmer is saying it, that it needs to be done. In the case of the Sorcerer's Apprentice, the brooms have no idea how much water is enough water, because they just haven't been told so. Based on the apothegm of Professor Wiener, from cybernetics, I think we should bring to the table 3 fundamental principles when dealing with AI independently of who is managing it: knowledge, transparency, and accountability. Knowledge of what the process is, what processes can be translated into algorithms, and how to educate the algorithm, and how to keep the checks and balances to prevent the algorithm from becoming this floating machine of collecting water without any limit whatsoever. Transparency, precisely to be able to gather and to put in force checks and balances that prevent AI from becoming a tool of either or both mistakes, of multiplying mistakes that might harm the position of taxpayers and tax revenue, or aggressive tax planning. You can also teach an algorithm how to do aggressive tax planning, because like I said, if you do not, and that comes from Dr. Wiener, that I'm not inventing that. The algorithm will just do what you teach it to do. Plain and simple. And thirdly, accountability. As a corollary of his ground rule, Professor Wiener pointed out that in all processes dealt with through what he called cybernetics, or by artificial intelligence, there's always need to have some point in which human control becomes paramount, becomes essential, in order to address the possible misdirections of artificial intelligence. In that regard, you need to establish the proper human checks and balances of the processes led by the algorithm. And secondly, the legal, including the legal accountability of that human person in charge of an AI conducted process, so that the system can keep its integrity and not just surrender it to the robots, as Professor Isaac Asimov would haunt us with sci-fi kind of stories.
Thank you. A couple of, again, things I just wanted to kind of go through here. So if we're thinking about AI broadly within the tax professionals' firms, and again, trying to think about the ethical issues, right? One thing, and I think this, Henry, was you, and actually I thought that was really useful to mention, which was sort of on the client side. So it's within the relationship of the tax advisor, but it's on the client side. To what degree can AI, data management, increased tech help clients better manage their information to avoid basically making unintended missteps, right? Sort of failures that are essentially, clear failures. And so that would be a nice advance, right? I think that would be helpful. Then, as we're talking about it more on the advisor side, the use of AI, and thinking about the problem. So obviously, the sort of the data in problem that might be on one level I was thinking of that more from the government side, as the government's collecting data, for example, deciding who to audit, what kind of data are they using, how much does it misalign with certain things, or inappropriately align with factors we don't want to take into account. But on the tax professional side, I think really sort of the conversation is coalesced around sort of the analysis that's being undertaken. Right? So if we start with the simplest functions, and I think, Elaine, this is where you were thinking about the potential for fewer trainees. So imagining AI taking over the most mundane of functions, it could be that those are ones that involve very little discretion, really highly agreed technical expectations, and so it really is just labor. As we move off of that, it really is judgment. I mean, it may be a program, but it's essentially a program for them to execute judgment, to make decisions. And so, I guess the questions that kind of emerge from that, right? They could have substantive errors, and I know that we talked about, the computer doesn't go to jail, you do. But since our panel's really thinking about ethics, I worry even more, not when they make a substantive error, which I do, of course, care about. They get the law wrong, but the programming involved, the algorithm involved, is making a call effectively as it pulls together all of the sources of information and layers on the facts. Those calls are going to involve, as they move away from the purely mundane, they are going to be ethical questions. They're going to make choices. And so I guess a couple of the questions that I think of are they going to make unintended ethical mistakes, even things that we wouldn't want it to do? So it's if we had been asked the question as the tax advisor directly, it makes an unintended ethical error from our perspective that we might not see. The second is, to what extent is it allowing us to bury our ethical issues? Like, we know these are the spaces we typically struggle with in our practice area with our clients, and somehow it's now going to be buried inside that. So it's still happening. The tension is still there in the interpretation application, but it's sort of buried in the AI. And then the third, another issue, they're not independent, or they're not, they are independent, I should say, and all possible. Does AI make it even easier and easier to be unethical? Does it find even more? Does it analyze in ways that we don't have the time to do, to find various possible extensions, interpretations that then make it actually more likely that we'll be pushing the boundaries of sort of proper reporting, wherever we think that may be? Does it actually facilitate the pushing of those boundaries? So if you have any thoughts on any of those questions, I'd love to hear that. Amparo.
Yeah, here I see that you have a problem with intentions and motivations, and that's important from a justice perspective. I mean, you can be more efficient when dealing with issues, but when you have made that choice to apply one scheme, you usually have a justification, and algorithms lack the context to make that sort of choice. So they are quite limited. And using this or abusing of these possibilities may maybe lead to oversizing IT resources in companies, which is always some temptation by saying, well, I have invested so much in this, so I have to exploit it to the fullest extent. And maybe it's not a reasonable way to proceed. And at the end of the day, this forces also the system to take into consideration objectives, parameters, and leave only small ways or to try to explain why your position differs from the rest of the world, because you might have a justification, but to analyze and ask for accountability, you should be able to explain. And sometimes there's no a place in a form to fill out and explain your motivation or the reasons why you chose in your circumstances that scheme. So at the end, this lack of leaving room for explanations could even harm the whole system and be not unethical, aethical, leaving ethics aside.
Before I come to you, Carlos, I just wanted to mention, I understand there may be some attendees who have raised their hands to ask questions. We don't have that capacity since we can't have your recordings without a waiver. So if you could please put your question in the Q&A function, then we can take it from there. So we encourage you to do that. Carlos.
Short and sweet, AI is a tool. And as a tool is as useful for whatever ends as the holder of such a tool has. So a knife can save your life or can kill you. It depends on what you do with it. So the answer to your questions, short and sweet, would be yes. It's obvious the possibility of unethical decisions stemming out of artificial intelligence, even if unintentional. And that's precisely what stems from the application of the garbage in, garbage out. Many of the data that it's feeding the algorithm might be contaminated, but might be tainted with biases, with whatever problems that will only be visible when auditing the outcome of the process led by the algorithm. And I can only think in the problem that profiling poses to criminal justice, in which the problem of profiling, for example, in the US, there has been a number of scholarly papers addressing the problem of profiling of African Americans in the granting of parole and etc., due to the information that has been fed to the algorithm, according to which statistically is more likely for African Americans to relapse into crime. And therefore, the answer to your other two questions, and now escape my mind, but I do know the answer, is it depends. It depends on the quality of the algorithm. It depends on the, I will go back to my previous intervention, to the transparency in the algorithm. How does the algorithm do what he does? And finally, to the accountability, to the possibility of attributing the result of an algorithmic process to a human who will be held accountable for what the algorithm does. If you put it in quite simple terms, if the dishwasher doesn't wash your dishes properly, you don't blame the dishwasher, you just do the dishes yourself, right? And you'll be held accountable for not having your dishes washed properly, so to speak. I know that the example I chose is a bit, I don't know, Friday-like example, but I think it's graphic enough to illustrate my point.
You know, a couple of the questions I think still circulating within this, to the extent we imagine that tax professionals are going to increasingly turn to various kinds of algorithms to assist them in their work, who's going to be drafting it, right? We do know that some firms have really invested to some degree in their own modeling tools. But that's a little, I mean, that is somewhat this, but I don't think it's completely where we are with AI. I think the modeling tools may not be quite the same. And the question is whether or not we're really going to see firms make those individual investments. If not, then we're looking at some third party that's really going to be doing it as a product that's going to be sold. And I think that raises a number of really interesting / challenging questions. First of all, who are they who are designing it? We talk about transparency. There may be a limit to how much they want to make that transparent. You could choose not to purchase, but you may feel that it's the few on the market. And what does it mean to be transparent? I mean, literally, are we going to go through line by line interpretation, choice patterns? I mean, how much really are we going to be, as outsiders not engaged in designing the algorithms, how much are we going to really understand? And then finally, another question is, what does it look like if we see large numbers of tax advisors using predominantly the same algorithms, AI, to do this work? Do we see a convergence in what's happening? And and then again, that goes to my question is, where's that convergence headed? Is it headed towards an increase in abuse because actually AI is even better at finding gray, borderline, or other kinds of risky areas and isn't designed to pull back? Does it just sort of funnel everybody into the same position? If it were, I suppose, more ethical, that might be easier, but it's not clear. And someone had put a question in basically, can you teach AI to be ethical, right? I mean, how do we design that last piece? What does that mean? What does it mean for the AI to be ethical, separate from the inputs, et cetera? What does it mean? Amparo.
Yeah, I've been working for the past 5 years in a EU project on ethical, legal, and socioeconomic impact of robotics and AI. And the issue basically is to deal with inclusivity when you are trying to develop technologies. And responsible research and innovation, at least in the EU framework, calls for having the stakeholders on board when you are designing these tools. So I was wondering to what extent standard setting organizations for ethical aspects in taxation are in touch with these developers of technologies, because maybe some sort of supervision, if they are following this approach, could be arranged. And I think it would make a lot of sense, because as Carlos pointed out, accountability is really important, and not every single person can check this. But of course, you will get important input from experts, and that's what you want, and that's what make it you trust in the final result. And for instance, the U.S. Government Accountability Office has checked the development and use of technologies by the Internal Revenue Service, and that's happening in the public sector. Why don't we try to supervise somehow through the technological tools how they are ethically built from a different neutral standard settings academia body to try to make it fair? Thank you.
So actually treat that as sort of an answer to one of our questions from the prior panel, which is what kind of role, additional role, expanded role could professional organizations play that would help support and facilitate, sort of the pursuit of ethical practice by their members. And so perhaps taking on a role in reviewing and designing AI. Carlos.
I actually would like to turn the questions around and suggest that it's possibly that the OECD has the answer. In its report on tax digitalization and digitalization of tax administrations, the OECD proposes the so-called tax administration 3.0, which I'm oversimplifying things, obviously, but it proposes that there will be several processes led by the tax administration that will count on algorithms to make decisions for the tax administration to assess, to actually conduct the audit and make the assessment on the position of the taxpayer based on a standard given by the tax administration. So it appears that the tax administration has, or the OECD has come up with this magical solution according to which tax law problems have a single and only answer, which actually amuses me and makes me wonder, okay, what does the OECD know? We don't know. In terms of granting that the use of AI in tax matters actually allow taxpayers and all the participants in the tax relationship to have room enough to conduct themselves within what we have called the bright area, and not just minimizing things to leading to a administration-led solution to all things. And then is it ethical, or is in this solution addressed by the OECD or proposed by the OECD the solution to the questions Professor Ring has posed?
Well, we may wait to find out. I'm not sure if anyone has any immediate thoughts on that, but certainly, yeah. I will just say I imagine it will be a long and complicated question for quite some time, just by what we've seen in the past year. We only have about 15 minutes left, and I wanted to turn to two other questions related to tax professionals and sort of globalization. And the first one, and this may be a little bit more related to accounting firms than law firms, but since accounting firms dominate globally in the tax advising arena, I think it really makes a lot of sense to consider it, which is how should we be thinking about, how would we want our tax professionals to be thinking about the potential conflicts and how practices have been set up? So to the extent that the same firm is engaged in external auditing services, also tax consultations, doing an internal audit, client representation, sort of the mix of services, they're a little more varied typically in an accounting firm than we see in a law firm. But as I said, law firms dominate globally. You know, what do we make of that? And are there ways, you know, what are the ways to make that less problematic from an ethical perspective, to the extent that it does raise some concerns for you? Henry, I see you started.
Yeah, so you clearly, those are challenges, and in many larger firms, there is a prohibition on providing non-attest services for attest clients, and there is a move within the profession for those of us who track this to split these firms up, because oftentimes the more lucrative engagements come out of the consultancy aspect of the service, where the attest work maybe be more important from a reputational standpoint. But as we've discussed throughout the day, there's financial pressures here, and so that is clearly something that's underway within the profession that the profession is dealing with.
Are there any risks? So the separation that you identify is one that we're certainly seeing here discussed in the US much more prominently than in prior years. Is, you know, is there something on the other side? Is there any ethical advantage? As opposed to being neutral, is there any ethical advantage to these larger firms retaining a mix of practices and services, at least to the extent they tried to say separate services by client or at least unit, so that those engaged with certain kinds of advising are not participating in attestation work. Is there something to be gained from it that perhaps we're missing?
I think there could be a benefit in the sense that if you have a client where you're in deep with that client, right? You know the management, you know their operations. Clearly, that is going to provide you some benefit because of how you tailor your services, what work you're going to do for them. You can identify projects that would be helpful to them, but you do run the risk. It's in a smaller context, there's a number of accounting firms that have a investment advisor part of their firm. And does it make sense for the accountants who are preparing the tax returns to also be involved in the investment advice? So it's a very fine line that you have to walk down.
In the US, and I'm sure in other jurisdictions, we've gone back and forth, for example, in banking regulation, to what degree single entities can be engaged in multiple lines of activity, or the degree to which they need to be separated. So we've struggled with this and gone back and forth. Is this something that we should be considering from the perspective of enhancing tax ethics to bar any practitioners or firms from multiple lines of work? I mean, should it be something that's not left to the firms and something that's part of our domestic regulation? Amparo?
Yeah, I think so. We've seen recently in the Corporate Sustainability Directive that was approved last December, at the EU context at least, that there are limitations on those verifying non-financial information, providing services, and trying to establish a set of requirements. So I would say that it's better to try to keep functions separate when it comes to these delicate matters. It's like you don't see the stick on your own eye, as the Bible says, no? So I would better separate these functions and leave it to external experts. Yeah.
Henry?
Well, you also have that, I mean, even in a much smaller context, you have a potential conflict, forgetting about the different lines of service, where you as an advisor are providing tax services to the entity, but you're also assisting the four owners of that entity with their individual planning and obligations. And many firms build their client base around that model, where they take on the entity's work, they do the individual's work, they do estate planning, succession planning, trust and estate type of work, and that clearly is problematic.
Well, but also your example highlights the ways in which perhaps some remedies as a push for improved ethical structures puts a burden on clients.
Sure.
So if you can't, especially for a smaller, more family, closely held operation, the more I can't rely on a single tax advisor for sort of everything. It's also a burden borne by me. So it's not just a single path pursuit of ever improved ethical guidance and practice. It comes at a cost for somebody. The other thing that when you mentioned that I was thinking about, so I was arguing in my own head with myself while listening to you, which is the ways in which we are always, there's always some level of tension in terms of possible multiple functions. So you identified another really clear one, but I was even thinking to the extent that, and this comes up a lot in some of our ethical panel discussions, you are advising a client, but this issue may get raised on audit, and at what point can you no longer even represent them on that matter because you start to become perhaps an interested party? And whether or not they're thinking about suing you, or there'd be reasons, or if any of that gets on the table, at what point, does it become one that you have to drop out of? But that's sort of almost always along the way a possibility. Once you go from pure advising, maybe return prep, and then start to represent them in audit, and there's serious disagreement, that potential goes from being just, merely possible to, in front of you. And would we insist that you always had to sort of separate that function out and drop the advising or the representation that you're doing? So I'm just trying to argue with myself that maybe these bright lines I want to create, if I'm really, really pushing on it, they get smaller and shorter. And now you've got 10 different tax advisors covering every little facet of your personal and professional life. And that has its own costs as well. All right, so in the remaining few minutes, I actually wanted to return to something that came up in the first panel. And I just thought it was a nice way to close and pull together a variety of thoughts. And so I was just going to ask you to each offer your own take on the question, the thing you would highlight the most. And it's the question of, can we really imagine a world without tax professionals? And more precisely, rather than just say yes or no, but sort of what is it we lose in a world without tax professionals? Because we're talking about all sorts of ethical challenges, right? But this is the bright light. What is it we lose without our tax professionals? So whoever might like to go. Carlos, I see your.
We lose if we don't have tax professionals, but we still have taxes. But that's a possibility. You don't have tax professionals if you don't have taxes, right? But as that latest scenario is basically utopical. When losing tax advisors, you're losing one of the most basic safeguards the rule of law has.
I think
basically losing the rule of law.
I think lessons may be learned from history, and the most valuable lessons may be learned from the biggest mistakes in history. Last year, the European Association of Tax Law Professors carried out a study in relation to the tax systems, the history of taxation in a number of countries. And I found the chapter dealing with the history of taxation in Nazi Germany to be especially interesting for the purposes of this question. When it came to tax administrative law, Germany had one basic rule, and it was "Du bist nichts, dein Volk ist alles." You are nothing, the state is everything. And as a part of the movement, as a part of the measures meant to implement this concept of the citizen being nothing and the state being everything, one of the steps which were considered were the abolition of the post of tax advisor. And they were on the verge of rendering the position, the role of the tax advisor illegal. And it was an office which was really frowned upon. And that makes you think. So that, as Carlos was saying, in a democratic society, in a free society, the tax professional has a role to play to balance the private interests with the public good.
Thank you. Other thoughts to close out? Elaine.
Yeah, I mean, I think if you look at an awful lot of, as Robert was saying, history, and you look at, the Boston Tea Party, and I mean, there's all sorts of examples, Robin Hood type examples in the UK, and there's a lot of revolts over tax, and typically they are when the system becomes completely unbearable and too burdensome for the taxpayers. And I think the tax practitioner is just, it's a tripartite relationship. It doesn't work without any of the three, I think. And it, you know, that intermediary, I like the term intermediary actually, because I think that captures maybe the role that they play to, again, just reduce that power imbalance between a normal taxpayer and the revenue authority, and allow for that level of compliance with the law. We'd also, many of us, be out of jobs. So
not to be overlooked. Henry.
Yeah, so just reinforcing Elaine's point, the idea is that as the professional advisor, you have that role to play in that intermediary and an educational role to assist the clients in making sure that they're aware of what their responsibilities are in serving the system, but also as a way of another check and balance with the government, so that we don't get to that point where the government takes everything, and it is the government that controls everything. So without, I think, tax professionals, we could be in that world.
Amparo.
Yeah, and also we should have to show the value of having tax professionals in society more to our students. Because many of them, at least at law schools, when they come to tax world, they say, well, that's numbers, that's accountants. And when you're teaching an accountant in a commercial area business, they say, well, that's law. So you have to try to show what adds to the functioning of the system, as it was mentioned, but also because it makes a difference between the jungle and an advanced society. And the role here is to give certainty and also trust. Thank you.
Thank you. Since my utopia does include a tax system, I have to say I really, I sort of really embraced all your thoughts about, the role of a vibrant tax advising function in ensuring the health, the robustness, and really the legitimacy of the tax system. So thank you all so very much. It's been just wonderful sharing this time with these panelists. And I would, again, as I said, like to thank you for your time, your participation, your real energy in exploring what I think are really important issues. And just to kind of follow up on the thing you just mentioned, Amparo, I do think if students were to really sit through today's session, it would give them a different perspective on really the importance and the significance, as well as the challenges of being a really effective tax advisor, why it really matters. It's not just going to earn you money, but it's actually a really important part of a system, which is going to include a tax system, and needs to be done in really a way that maintains its credibility in a democracy. So thank you for all your comments and time, and I hope you all have a wonderful afternoon.
Thank you so much.
Thank you. Thanks.
Thank you.